Good morning, all of you. Today we will discuss about the options trading, and we will go from scratch. Let us learn the option trading from the scratch, dear friends. Okay. So my intention of making these educational videos is to make people understand the options trading from scratch. So it's a very simple concept if you understand the foundations in a better manner. So for that, so if you want to learn futures and options trading, so let us deal with the basic terminologies of options trading now. So here, so what do you mean by options trading first? So I think already all of you would have some experience in trading. So you should have been a long-term investor, or you would have been a short-term investor or intraday trader. That's one part. So apart from that, one of the most fascinating thing about the trading is most of the people uh, where you can make a lot of money, and if you are doing it in a systematic way, is in the futures and options trading. So if the name options trading was not given, so I would say the another name they would call it as, they would have called it definitely as alternate trading. So why option trading becomes very important? Why option trading becomes very important in the sense why most of the trading done in the market today, more than 70 to 80% transactions are happening in the options market. So why people are doing that, you should understand. So that is why we need to understand the options trading, guys. So this is another alternative method of trading. So another alternative method that is adopted for trading. Suppose let us say you had a let us say you have purchased. So suppose suppose I purchase one share. Okay, so one share of Reliance, right? So what is the Reliance share? Maybe let us assume that one share of Reliance is 2000 rupees. So one share of Reliance is 2000 rupees. And now you have, let us say you have only 12,000 rupees. You have only 12,000 rupees. So out of your 12,000 rupees, if you want to purchase shares of Reliance, how much shares you can purchase? So you can buy, maximum 6 shares, right? So you can buy maximum 6 shares. So what is that? So what is the expectations? So your expectation is you have invested 12,000 rupees. So you have bought 6 shares of Reliance. So you have invested 12,000 rupees, and out of that 12,000 rupees, 6 shares of Reliance you brought, and you want, as normal mentality of all of us, so usually I am expecting around 5% spike in the prices. 5% spike in the prices, in the sense 12,000 rupees you have invested. So out of this 12,000 rupees you have invested, you want 5,000 rupees spike, that is 5 divided by 100. So what is going to happen? 120. So what is so 12,000 rupees you have invested, so usually, so 120, so 600 rupees. So you are expecting 600 rupees profit, an investment of, so 600 rupees profit you are expecting. So out of your invested amount 12,000 rupees in a day, in a single day, or within a 2 days or 3 days. So not, you are not expecting 600 rupees in 1 year. You are otherwise no use at all, right? You can keep it in some bank FD or somewhere else. You will definitely get that amount, right? So what is the expectation? So you want the prices, you want higher returns, right? And with that particular 12,000 rupees, so which is in a day or in a 2 days, sometimes it is, most of the time, not sometime, it is not possible. So if you want to, if it is not possible, but still you want to trade, you have limited amount of money, and still you want to trade it, and you want to make the profit out of it. So instead of buying the whole shares, 6 shares of Reliance, I will rent it. Okay, so what I will do, I'll go for a renting the shares of Reliance. Means rent, we rent the house, we give it for a particular duration for the 6 months or maybe for 1 year, right? In the same way, the shares are going to be rented for particular expiry date. For example, if I am going to rent the share, so what I am going to do, what is the next concept? So instead of buying the whole shares for 12,000 rupees, what I am going to do, so I am going to what I am going to do, so I am going to rent, so I am going to, on the rental basis, I am going to purchase the shares of Reliance for either 1 month or 1 week. So now 1 week will come to that later. So let us say for 1 month, maybe from 1st April, right? From 1st April to 30th April, next month, right? From 1st April to next. So what I am going to do, so I am going to rent that for 1 month. So let us say I have 2,000 rupees in my hand. So let us say, so for 1 month, so let us say that is the current price. Okay, this is the current share price of Reliance, right? That is 2,000 rupees. So let us say for 2,000 rupees I am going to rent it. So I am going to rent it. So how many days? For 30 days. So for 1 month means for 30 days. So what happens here? So now there is a restriction. So if you want to rent it, you cannot rent a single share. So obviously the market, the SEBI or the National Stock Exchange or Bombay Stock Exchange, you have to rent it based upon the number of shares, means based on lots. So one lot, so they are going to fix the lot size. So one lot, so let us say if they are fixed for 250 shares, means you cannot buy only one share, you have to buy as 250 shares, means you have to rent 250 shares of Reliance, not just one share of Reliance. So 250 shares you have to buy, right? So what they will do, so for one share, so one share instead of 2,000 rupees, so if you want to purchase, you have to fully own the house, that is 2,000 rupees. You want to rent the house, obviously it is very less, right? So that is why, so what they have done, so if you are renting, so for one share they are giving it for 50 rupees. What is there for? They are giving it for 50 rupees. So 50 rupees per share. So 50 rupees per share. So in one lot there are 250 shares. For each share 50 rupees. So what is going to happen for one lot? How much money I need? So what is this? So what how much money I need? There are 250 shares. So into per each share there is 50 rupees. So 25 into 5, so 12,500 rupees. For 12,500 rupees I am going to purchase, I am going to buy Reliance, I am going to buy Reliance shares and I am going to hold it for 1 month. So buy and I am going to hold it for next 30 days. Okay, based upon how the price fluctuation is going to happen, based upon that I am going to, based upon how the price fluctuation is going to happen, based upon that I am going to get the profit, or I am going to make the profit, or I may not make the profit depending upon the market condition, or even I may be under loss. So under what are those circumstances? Now let us see what are those some circumstances. Now let us see. So now let us say, now what I can say is, now let us understand. So in order to understand this, you should know some terms. So you should know some terminologies in options, that is intrinsic value, time value and premium. So always, so you should remember premium. So what is premium, what is intrinsic value, what is time value? So premium is equal to intrinsic value plus time value. What is this? So premium is equal to intrinsic value plus time value. So premium is equal to intrinsic value plus time value. So similarly, so look at this, premium is equal to intrinsic value plus time value. Similarly, we have the formula for intrinsic value. Intrinsic value is equal to current price or spot price, means at the time, now today, what is the condition of the market, what is the price of Reliance as of today. So that is the spot price minus, okay, so minus strike price. So this is the basic thing we should know. So what is intrinsic value, what is time value, what is premium price? Let us understand. Now let us understand that. Okay, so how to understand? So now let us say, okay, now let us say you have okay, let us say now you have bought this. So one is for 2000 rupees. So what is this? So at present the value is 2000. Okay, you can also buy it at 2050. You can also buy at 1950, right? But right now, what is the price of the Reliance? That is 2000 rupees. So now now what I am doing, I am purchasing this at 2000 rupees. So that is what you can say, the present price. So similarly, now what I can say, you have intrinsic. So this you are buying at 2000 rupees. So this value, whatever value I am getting, this is nothing but the intrinsic value. So there is no time value here. Okay, so now the price is at 2000. I call this as at the money. What I will call at the money. At right now, at the money is 2000 rupees. So at the money, there is not going to be the time value. Time value will not be there. Whatever the value will be there, that will be the intrinsic value of the product. So the stock. So that is going to be your intrinsic value. Similarly, what you have what is that? Similarly, what you have time value as well. You have time value as well. So what is this time value? So what is this intrinsic value? So now let us say, here you know that, so 12,500 rupees. So this 12,500 rupees, what I have bought means I bought in terms of lots. So we paid, so here we paid the money, premium for. So here intrinsic value. So here what is this? So whatever this intrinsic value will be there, so that is going to be 0. And here premium for whatever the money we have paid, that is going to be the premium. So premium is equal to, already know, intrinsic value plus time value. Sorry guys, IV is going to be 0 at the money. At the money, intrinsic value will be 0. Whatever the value will be having only for the time value. So time value is, I told I think vice versa, but actually is IV is equal to be 0 at the money, means right now today you have purchased at 12,500 rupees. This is completely because today the market price is 12,500 rupees. So total amount whatever we have bought the Reliance shares, so that is totally the time value. So that is totally the time value. So we are giving the rent, so there is no extra profit. Even after 1 month the prices are not going to increase. There is no loss. So intrinsic value is 0. So we are giving rent, so time value, that is the premium. When bought under at the money, then premium is equal to time value. When brought under at the money, so what is at the money? So 12,500 rupees I brought, so that is the premium. So when brought under at the money, the premium value is equal to be time value. So now let us say, now to make you understand, now what I will do to make you understand, now let us say one thing. So here what I am going to do is, so now what I am going to do is, here instead of 2000, okay, so now what I am going to do, the market is at 2000. So now so even though current IV is 2000 rupees, I am buying at 1950 rupees. So instead of buying at 2000 rupees, I am buying at 9050 rupees. So already, even though market price is 2000, I am purchasing this at a lesser price. So you are already under 50 rupees profit, already under 50 rupees intrinsic profit, intrinsic rupees value profit, right? So in the money, so in the money means inside, so you are not going out of at the money, so coming inside this, so you have bought this under 1950 rupees and already you are under 50 rupees profit. So what is the premium price now? So already you know, so premium is equal to what you already know, IV plus time value. So IV is there, so plus time value is there. So what is this intrinsic value? Intrinsic value is plus 50 rupees because you are already purchasing below the normal price. Below the normal price is 2000, you are purchasing at 50 rupees. So what is going to happen? Obviously, so that is what intrinsic value is equal to spot price minus strike price. What is the spot price? 2000. What is the strike price? 1950. What is the intrinsic value? Plus 50. So what is the intrinsic value? So plus 50 rupees for what? If you are purchasing at 1950 rupees, intrinsic value is plus 50 rupees. So what is this? So what I am going to do here? So what I am going to do, since we are purchasing at a lower cost, since we are purchasing at means already intrinsic value you have 50. So what is going to happen? There is going to be the time value will be there. The time value will be, so let us assume the time value is 30. So here the time value is 30. So what is going to happen? Total let us say premium price is equal to be 80. The cost of the premium in the sense the rate, 80 rupees is the premium rate. So here what I did, so here one share, that is 1 share rupees is, this itself is premium. So premium here, since it is at the money, in the at the money, what is going to happen? IV is going to be 0. Intrinsic value, sorry, at the money what is going to happen? Intrinsic value will be 0. Only time value will be there. What is the time value? Will be equal to the premium. Time value will be equal to the premium because IV is equal to 0. So what is how much it came? So it is 50 rupees. 50 into 250. So it is going to be 12,500 rupees. But here what is there? But in the inside the in the money, it means lesser than 2,000 rupees. That is in the money. You call this as in the money. What happened? Along with intrinsic value, you also have the time value. So as a result, so the premium price shooted up to 80 rupees. Premium price shooted up to 80 rupees. So what is going to happen here? So premium price is 80. So which in place 80 into what is the lot size? Lot size 250. So 80 into 250. So what is going to happen? So 0, 25 into 8. So 25 into 8. So 20,000. So you need 20,000. You need 20,000 rupees to buy. So you need 20,000 rupees. Here you need 12,500 rupees. Means, so you are purchasing, so 2,000 rupees. This is the at market price at the money. If you want to buy this one lot, you need 12,500 rupees. So if you are purchasing at below price, that is 1,950, how much you need? You need 20,000 rupees. 20,000 rupees. You need 20,000. Similarly, if you want to purchase at 2,050, so if, okay, I will purchase more than the required current market amount. Means instead of 2,000 rupees, 20,000 this one, I will select the strike price as 2,050. Okay, so strike price is 2,050. So you should know, understand the difference between spot price, strike price. So spot means where the current market is. Currently the market is at 2,000. You are purchasing it at 2,000. That is at the money. Currently market is at 2,000. You are purchasing it at lower than the market price. That is in the money. And similarly market is at 2,000. You are purchasing at higher price 2,050. That is out of the money because higher. That is why it is called as out of the money. When you are going for out of the money context, so when you are going for out of the money context, so what is this? You have to now what you can say, so you have to calculate the IV. So IV is equal to what? Spot minus, so spot price minus strike price. What is this spot is, now the market is at 2000, so market is at 2000 rupees, but you are purchasing at 2550 rupees, so this is minus 50. So remember, whenever intrinsic value is minus 50 rupees, so IV will be considered as 0. Negative intrinsic value will be considered as 0. So as a result, what will happen? So now for your reference, I will just draw it in a different color so that you can understand. Okay. So similarly, so now you see here, now for this 2050 you are purchasing, see the actual value is 2000, but you are purchasing at higher rate. So what will happen? The intrinsic value is negative, there is not going to be interest. So whenever the intrinsic value is negative, it is considered as 0. So the premium price, so how much price? See, if you are purchasing at out of the money, so what I am going to do is, what he will do, the premium, so premium is equal to, already you know, premium is equal to IV plus time value. Here IV will be 0. So what is going to happen? Our intrinsic value is going to be 0, and time value, so time value, let us say, let the time value whatever he will give, so is so okay, let us say 25 time value. So 25, so 25 into, so 25 is there, so means I am assuming, okay, 25, what is the lot size? Lot size is, one lot is minimum you have to purchase 250, so 25 into 25, so 625 0. So means you have to give 6250 rupees, means you are purchasing out of the money, you need less amount. If you are purchasing at the money, you require medium amount, means normal range, normal. So if you are purchasing in the money, if you need 20,000. So what is this? So how to understand this? So how to understand this? So now let us say, you have to now let us understand this practically by looking at the chart. So now you understand the concept, you understand in the money, so out of the money and at the money. So now let us glance it, just I will revise it. So here what is this? Just I will write the formula. IV is equal to spot price or current price, spot price minus strike price. Similarly, premium means the rent you are paying. So I am buying the premium or nothing but the rent. Since I cannot buy the whole structure, I am renting it out. Premium is equal to IV plus time value. So now let us understand this. So what is going to happen? So if you want to see that practically, now let us go to option chain or option abstract. So as I told you, so look at this. So if you go to option chain, NSE option chain, what is option chain? We will come to that later. Just type option chain and open. Okay, so you have Nifty, Bank Nifty, anything. So let us check for anything. So let us check for Bank Nifty. Okay, so Bank Nifty is currently at 46,863.75. okay. So if you look at this, so you can recognize, you come down here, the gray color. So nearest value to 46,863 is 46,900. So 46,900. So what is this? So this 46,900. This is your out of the, so at the money. So at present, 46,900 is at the money, right? So I will say minus 500 plus 500. So for our calculation, let us say minus 500. So 46,000 minus 500 is, let us check for 46,400. right? This because this is in the money because it is lesser than 46,900. Similarly, out of the money in the sense plus 500. 46. This is 46,900 minus 500 is 46,400 plus 500 is 47,400. So this is OTM out of the. So now let us calculate all this, whatever the parameters I am discussing, let us calculate all the parameters. So for at the money, let us calculate. For at the money 46,900. So what you want to calculate? So I want to calculate intrinsic value. So intrinsic value. So IV is equal to spot price minus strike price. What is the spot? Right now at the money means right now the market is at 46,400. So 46,900. So sorry, market is at 46,900. What is the strike price? What is the strike price? So now what I am going to so with respect to this one strike price, once I will select in the money. So what I am going to do is I will select first I will select minus 500. So strike price 46,400. So in the money option I have selected. So IV for, so I am calculating the IV for this one and this one. This I am calculating IV. I am calculating IV for both in the money and the out of it. So what is this? 500 rupees. So 500 rupees. 46,900 minus 46,400 is 500 rupees. So already know what is premium. So how much rent you are able to pay. So IV plus time value. So IV plus time value. Right. So time value you don't know. Calculate the time value. Time value is equal to, so LHS RHS you change it out. Premium minus IV. So premium is how much? So premium will be given in the option chain. So if you look at the option chain, 4,900. So you go here 4,900. You see here how much it is. The last traded point you have year on year. So both last traded point is there. Which one you have to choose? You choose always this one at the left side. Whatever you have, you choose that one. Later we will come to what is call and put option. At that time I will tell you. So the price last LTP means last traded point 292 rupees. 292 rupees is your premium. So 292 rupees your premium. So IV is equal to premium minus IV. So IV already there 500 rupees. 500 rupees I know. I want to know the time value. So time value is equal to premium. Premium is 92. So minus IV. What is this? 692 minus IV. 46,900. So intrinsic time value is equal to premium minus intrinsic value. So premium is how much? 292 rupees. So here for 600 and okay, we will see monthly which expiry I have selected. 1 minute we have to select. Okay, I will select the next month already because we will select the next month, that is better. Okay, we will select the next month option, that is very important, that is better. Okay, now you see 46,900 46,900 Bank Nifty. Choose the date. I'll choose April, 3rd April. I have chosen. You want any date you can choose, not a problem, just for our understanding. So for 46,900, what is the premium? 570 rupees. So what is the premium? 570. So premium is equal to, so what is this? 570 minus IV already we calculated 500 rupees. So time value for this is 70 rupees. Time value for this is 70 rupees. For in the money, So what is this? IV is same. So IV is for 500 for both. Time value for in the money. So look at this in the money. So this is in the money because it is lesser than 46,900. Time value is 70 rupees. Similarly, you calculate time value. So not the intrinsic value will be same. So time value you calculate for both. So for 47,400, look into the data. 47,400. So 47,400, you come here 324 rupees. So 324 rupees means, so what is going to happen? Time value is equal to premium is 500 minus 324. So premium is 324 minus intrinsic value. So premium is, so this is negative. So whatever the value you are going to get, that is negative. So whenever, so whatever you are going to get to the time value, so time value is going to be negative. So what is going to happen here? So 324 minus 500 minus 176 rupees. So minus 176 rupees. So out of the money minus 176 rupees. So what is going to happen? Time value will be higher, 176 rupees here is the time value. So similarly, so here what happens? So in the money time value, so here the time value will be higher. So now what you have to understand by this is, so the time value is 70 rupees for in the money, and so time value is going to be 70 rupees. Similarly, for another one, the time value will be 176 rupees. So what is this? So how to interpret intrinsic value and time value, that we will discuss. So intrinsic value is equal to spot price minus strike price. IV and premium is equal to IV plus TV. So you will get some intrinsic value. So intrinsic value you will get 70 rupees. Similarly, so spot minus, so whatever you are going to get here. So now for this one, for your understanding, what I am going to do here, here I will say for the next, for this one, okay, 47,400. So you know that IV is equal to spot minus strike. Spot is 46,900. What is the strike price? 47,400. So what is this? Minus 500. Already I told you, look at this. If you go back to this one previous section, if intrinsic value is IV is negative, IV is equal to be 0. So what is going to happen? So IV here is equal to be 0, not minus 500. So it is going to be 0. So premium is equal to what is this? Premium is equal to time value plus intrinsic value. Intrinsic value already 0, only time value. So what is the time value? So time value is nothing but premium minus intrinsic value. Premium is intrinsic value is already 0. Whatever the premium you are seeing in the whatever the so that is why instead of minus 176, so now you see here, so this minus 500 I cannot consider. This has to be 0 because it is negative value. Already I have to consider this as a negative value. So time value is equal to 324 rupees. That is what we see here, 324 rupees. See, look at this. Last slide, that completely means out of the money will be having very high time value. Out of the money will be out of the money. This is out of the money. So OTM. So OTM time value is equal to how much? 324 rupees. Similarly, in the money, time value is equal to 70 rupees. Means when you go out, when you go from at the money to from presently the bank nifty is at 46,900. From 46,900 you are moving higher. time value is increasing, moving towards out of the money. Similarly, when you are moving towards inside the money, the time value will be decreasing, and that is the uh, that is the thing, the concept you need to understand. What is intrinsic value and what is time value? All options means, for example, you will be having a product. So a product you are going to buy, it will be having expiry date, right? As the product reaches the expiry date value, okay, the intrinsic value is going to decrease. Okay, the actually what is going to happen, that intrinsic means the real value of the product is going to decrease, and the time value will increase. So like that, so whenever I am going to purchase anything, so that is the reason why you need more premium. For now, the basic learning of our this one is, look at this, at the money means 44,900. If you are purchasing at the money, what happens, you need some amount, and if you are purchasing at in the money, you need more amount than you have, because already you are under profit. And if you are purchasing out of the money, what is that, only intrinsic value is very less. Why intrinsic value is very less? Already the product is about to expire, you are very near to the expiry. Okay, you are very near, because time value will be there, so high time value. So you are purchasing out of the money, what is going to happen? Obviously the amount required is less. So that is what you can see here. For example, if you go to option so if you just go to option Abstra, and if you see, you already, all of you have option Abstra, right? So just click on the option Abstra and just log in and go to builder. Here if you go to Bank Nifty, right, and you go to options, the same options I am going to tell you. So we selected 30 3rd April there also, by looking at the year also, 3rd April, right, 3rd April. So now you see, so 46,900. So 46,900 is the at the money, already it is there. This is the spot price. So 46,900 is the spot. If you just want to buy that, look at this, how much amount you need, 8,500. What is the in the money? In the money is lesser than this, 46,900 minus 500. So how much? 46,400. So sorry, 46,400. So if you want to buy, instead of at the money, lesser than the at present price, that is in the money, if you want to purchase. So now you look here, how much you need. So I'll reset. So 46,400. So 46,400. So now look at this. So you need, look at this, how much you want, 13,400. More amount you need. That is what I explained here. So here in the section 1, look at this. If you purchase at 2,000, that is spot price, how much amount you require? You require around, starting what, how much we bought? We bought 12,500 rupees. We bought at 12,500 rupees. So we brought, so here if you are purchasing at 2,000, so you need 12,500 rupees. So if you are purchasing at 1,950, you what, how much you need? You need 20,000 rupees. Where is that 20,000 rupees? So that is what I explained you. So you need 20,000 rupees. Similarly, say here 20,000. If you are buying at 1,950, you means that is in the money, lesser than 2,000. Here also lesser than 46,000, lesser than the spot, that is 46,849, 46,900 or 46,900, lesser than the this value, spot price, lesser than the spot price, that is this is the spot, 46,900. So if you want lesser than this, how much you want? The market is at 46,900. So you want to purchase at 46,400. So what is this? I will just show you. For market is at 46,900. So 46,900, how much? Let us see. So this is 46,900. Bank Nifty options 3rd April. So spot price is 40 now at the money. Right now it's at 46,849, close to 46,900. So if you want to add a position, just buy it. If you want to buy, means on the rental purpose, you want to purchase the film, you want 8,500. So instead of 46,400, so what I am if I want to edit this, so instead of 46,400, I want to purchase 46,900 for minus 500 rupees. So instead of 46,900, I am purchasing at 46,400, lesser than that, minus 500 points. You need more amount. You need more amount. That is what here you need 12,500. You are purchasing at a lesser strike. Lesser strike means 50 points less. So you are paying more. That is 20,000. Earlier you used to pay 12,000. You are paying 20,000. Here also look at this in the analytics also. Earlier you used to pay 8,000. Here I am paying 13,000. So here also I am paying less now, more now. Means earlier it was 8,000. Now it is 13. So now what I am going to do? I am going to go out of the money. Out of the money means look at this. What is this out of the money? 46,900 plus 500. That is 47,400. So 47,400. So what is this? 47,400. So if I want 47,400, so now you look at, so okay, here only I will reset. So 47,400, 47,400. So 47,400, add position. So look at this, how much you want? Yes, look at this, you are getting at very cheap rate. You are getting at only 4,000 rupees. So same way I explained here also. Here you are getting at 20,000. So 12,000, or if else instead of 2,000 strike, you are choosing higher strike. You are getting at only 6,250 rupees. Here I am getting at, here also I am getting at very cheap rate, that is at 4,860 rupees. So this is all about today. Okay, thank you. So this is all about today. Thank you.